Greetings, my fellow financial ninjas. Thank you for all the likes and subscribes. It really helps out the channel. Making these videos is an effort. You got to record it and then edit it and upload it. So all I ask in return is smash that like button and subscribe to the channel. The topic that I have selected for today is how to invest in the stock market as a beginner. And I'm going to talk about a very simple strategy that can get you started and give you excellent results. I'm going to assume that you do not have any experience in investing in stocks, so you don't have any brokerage account or anything. So the first step in order to invest in stock market would be to get yourself a brokerage account. You can open an account with many different companies. They have there is Fidelity, there is Robinhood, TD Ameritrade. The options are endless. The one that I personally like is Robinhood because there is no fee for buying or selling stocks. I will put the link in the description if you want to get an account with Robinhood. As a referral bonus, both of us will get a stock. It could be a random stock that they can assign, but it's going to be free. So once you have set up your account, the next step is going to be funding the account. And the way to fund the account is to go into the settings and then select the funding options. You can fund it through your bank or credit union. Put in your username and password, or you can call them directly and give your information and they can help you set it up. It takes typically 2 days to a week for the funds to get transferred, and once the funds are transferred, you are ready to invest. Remember, I am not a financial advisor or a financial planner. I do have experience investing in the US stock market for the past couple decades, and I'm going to share things based on my experiences and what worked for me. If you need a legal advice, please consult a financial planner or a financial advisor. Now, let's say you got started and you set up your Robinhood account, you funded it. Now, what is the stock that you should be investing in? And you could get started with some large company like Apple or Coca-Cola or any one of those companies. While these companies are great, what I think is your core portfolio should be invested in a lot more diversified companies. So it would be a better idea to invest in a exchange traded fund or a ETF that covers the broad market. And this could be in the form of a S&P 500 index fund that invests in 500 of the largest US corporations. And that pretty much ensures a return that is similar to what you get on the S&P 500 index, which for the last 30 years, it has been around 9%. And one of my favorites that covers a pretty broad range of companies in US is VTI. That's the ticker symbol. The ticker symbol is the symbol for the ETF. So if you are in your brokerage account, you can search, put in VTI, and it will give you the page for VTI where you can purchase it. There would be a buy option. You click on buy, put in the number of ETFs that you want to buy, and then close the transaction. So it's as simple as that. The exposure to VTI can also be a long-term strategy, especially if you're not a financial nerd like me who wants to look at different numbers for different corporations and look at their balance sheets and how they are doing and so on and so forth. So if you want to avoid that and just want to have like a quick strategy that can be implemented within 15 to 20 minutes and have reasonable returns. The one and only stock that I would recommend and is my favorite is VTI. Just put whatever money that you are saving every month into VTI, and you can keep doing it, and you will be guaranteed at least the returns that the broad stock market gives. Now, obviously, this growth is not consistent. Some years the stock market might go up by 15%, the next year it may go up by 5%, the year after it may drop by 20%. However, history has shown that in the past 30 years, the S&P 500 index has gone up by 9%. And if you go all the way back to 1928, right before the Great Depression, the returns are about 10% a year. So that's a pretty good return on your investment. And if you put your money just in that one stock year over year, you can expect some of those similar returns from the stock market. The other great thing that I like about VTI, and not just VTI, any of the ETFs offered by Vanguard. Vanguard is the company that offers VTI, and the expense ratio or the management fees for managing these ETFs is very low. In case of VTI, it's only 0.03%, which means if you're putting $1,000, all you have to spend is $3 for as management fees, which compared to a lot of these loaded mutual funds, which charge anywhere from 1%, 1.5 to 3% even. So I like the Vanguard funds, and VTI, in my opinion, gives you the most bang for your buck. Now, let's say you wanted to get a little bit more adventurous and wanted to further diversify your portfolio, maybe get some exposure to international stocks or emerging markets and such. So the strategy I like to use is divide your portfolio into 5 parts. The first part would be invested in large cap US. The second part would be invested in mid cap US. The third would be small cap. And the remaining 2 would be international and emerging market. Now, what are the specific ticker symbols for these 5 ETFs? The first one is the Vanguard Large Cap Index, which the ticker symbol for which is VV. Again, it is by Vanguard, has got very low expense ratio, and has a large exposure to mostly large companies in US like Facebook and Apple, Google, Microsoft, Johnson & Johnson, Coca-Cola, etc. And I think you should put 30% of your money into VV. The next one, which is the mid-cap index ETF that I would recommend, is Vanguard Mid-Cap Value Index Fund, which the ticker symbol for which is VOE. This one has some smaller companies as part of their portfolio. And again, it has got very low expense ratio, and you can put 20% of your portfolio, total portfolio, into the stock. The next one is the small cap Vanguard Small Cap Index Fund with the ticker symbol VB. Now this one is more volatile compared to the other 2, simply because it is the companies are smaller and these are high growth companies, so there's a lot more volatility into it. However, these small caps do tend to perform better when the market is good, because these are smaller companies, and especially if these are high growth companies, the returns that you may expect on these would be much higher compared to some of the more stable companies. The next 2 ETFs that I'm going to talk about are international ETFs, and as such they are more volatile because there are more factors affecting these ETFs. These could be affected by the currency fluctuation, the geopolitical situation in that particular country, and so on and so forth. So these two ETFs are more volatile. However, the returns in some of the years are simply astounding. And so I highly recommend putting some exposure to these two funds. And the first one of these is the Vanguard International Stock Index Fund with the ticker symbol VXUS. I recommend putting 15% of your portfolio into this fund. The expense ratio again for this fund is very low, and the returns have been proven to be very solid. The next one is the Emerging Market ETF, also called the Vanguard Emerging Market Index Fund with the ticker symbol VWO. This has got a large exposure in the emerging markets such as China, India, Brazil, Russia, etc. And they include some of the largest companies in those countries. Now, again, this is probably going to be the most volatile of all the five options that I listed here. But in this particular stock has been shown to have some really explosive growth. These five ETFs are, I think, should form the core of your portfolio, and you should not get distracted by the market fluctuations, especially when the market goes down. In fact, if anything, I would recommend that if the market goes down by 15-20%, you should actually increase your investment and put more money in these funds. Now, there are other alternative investments such as gold and Bitcoin, and there are other specific stocks that you can invest in. And once you have a little bit of an experience and you get some interest into investing in the stock market, you can try to dabble your hand at some of the specific stocks or alternative investments. But this is what the core portfolio that I was talking about. It is very simple to set up. It should not take, as I said, more than 20 minutes for you to set it up, and then just consistently keep on investing every month and maybe rebalance once or twice every year to the percentages that I recommended, and you would end up doing pretty well financially. That's it for today. I will see you back in the next video. Please click on that like button if you liked this video. Subscribe to my channel. Comment what you think about this strategy. And I will see you in the next video. Thank you.